Yes, Herman Kok, working as head of research at Meyer Bergman. Meyer Bergman is a private equity investment firm based in London. We are focused on the investment management, active asset management of retail properties, urban mixed-use properties, with a focus on core European markets. And within those markets, we are especially interested in large cities, prime locations, as well as also as an extra additional business, outlet centers through participation in the Via Outlet Fund. We have a smaller investment operation also in the United States, again focusing on urban mixed use, retail-led in gateway cities.
Great, thank you. Tobias.
Hi, my name is Tobias Gollnest. I'm a managing director with CORESTATE. CORESTATE is a real estate investment manager. We have currently approximately 25 billion assets under management, which is covered by approximately 900 people who work for the company, spread across 42 offices, and we are active in seven different countries. Main country is Germany. My function at CORESTATE is I'm responsible for the commercial real estate side, and in this field we have a strong focus on retail properties. We have acquired in the last 4.5 years approximately 150 of high street properties spread into 130 commercial buildings and approximately 20 shopping centers. And I think this is the reason why I'm here.
Great. Anke.
Yeah, Anke Kaukars. I'm working for Jones Lang LaSalle, JLL, now already for 12 years and doing nothing else than shopping centers. I'm responsible for our shopping center investment business as well as leasing and management.
Great. Michael.
Hello, I'm Michael Harrison, and just over 3 years ago, my business partner and I founded Gravity Trampoline Parks. We sold our cars, really got into it, built the park physically with our own hands, slept on the trampolines. We've now got 10 sites across the UK, employ over 500 staff and just been valued at over 35 million quid. So things are on the up. We're trying to expand across Europe, and we've developed into much more now. I believe that leisure can add a great deal to the retail market, especially on the Mall. And I'd like to think we are the answer to a lot of the Mall's problems and hopefully to increase footfall and dwell time.
Look, let's start with you, Herman. You're coming from the research side. Economic growth across Europe, particularly in Eastern Europe, we're seeing huge growth there. Usually, this would have a positive impact on retail spend. What's your sense of that? Are we seeing this, or are we going to see this?
Well, of course, economic growth throughout Europe at the moment, I would say relatively robust. Also across the board, since a few years, finally also a recovery in the labor market, decline in unemployment, and finally in most of the markets also a rise in real incomes. So in that sense, the macro picture, as we look at it today, of course, is relatively good. Some uncertainties on the sky, of course Brexit is upcoming, populism, what's going to happen in world trade and so on. So there is a certain level of uncertainty at the horizon. We have to see how that will work out on the economy. Then of course zooming into retail, and when we look at retail, obviously retail sales, they are moving upward again, growing, in line also with consumption. But of course, within the retail sales, we see actually a differentiation online, offline. So physical stores actually growing slower than online channel. But of course, at the same time, retailers, almost all of them switching to multi-channel trade models. So part of the online trade is actually generated by retailers, and actually the stores in the customer journey, they play a role in that selling process. And whether the deal is online or offline, that doesn't matter. Often the store in a certain stage of the selling process, the contact the retailer has with the client, that store plays a role. But of course we see the landscape shifting. And we see the landscape shifting, and I think we will discuss more in detail on later. But what I'd like to say is we see a further polarization between prime locations and secondary locations. And when we look onto the European markets, we see that very much advancing in the UK for several reasons. We see that, let's say, initiating in a lot of West European markets. and probably delayed in Central Europe as the middle class there as an income group category is still growing.
Okay, good. And maybe just picking up with you, Anke, what are you seeing in terms of trends, in terms of shopping centres? We saw that the investment in terms of shopping centres was lower this year than it was last year. What's happening in terms of the services that people are looking for that are being demanded by the occupiers?
Yeah, in the occupier market, we see as well in shopping centers that there is a difference between prime and secondary. We see formats changing, but of course also the demand from tenants that investors change the centers, that they make them, that we have a better, more atmosphere, that people want to stay, that there's additional offer in leisure, in gastronomy, that people spend more time there and do other things than just shopping, just to have an experience that you probably can't have online.
Okay, good. And Michael, let's pick up with you. There's been an increasing move towards F&B, food and beverage, towards leisure, to making shopping centres have an experience. So what's your take on that? Obviously, you've grown the business quite substantially over that period of time, but what difference does it actually make? I guess explain a little bit about what you put in place, why shopping centres want you there, and actually, do you have concrete stats on how that makes a difference?
Yeah, well, like I say, 3.5 years ago, Land Securities, which are a great landlord, by the way, they give us the old unit at the back that no one can make work. That is what leisure was at the day. We'll give them that. Now we're much more front and centre. The retail is being built in the UK around a leisure offering. We want it to be more than just a tenant paying rent. And I firmly believe, what could I do to bring something to the Mall? I spent my time so far actually trying to impress the landlord as opposed to the customer. And I knew if I could get the guys, the F&B people down on the Mall, if I could increase their sales, then me doing my job, as well as earning money, would be for that landlord to say to us, we want you in some more of our schemes. So, it's okay, the tenants saying, well, numbers are down, people are shopping online. The tenants themselves, I believe, have a duty to look at the scheme as a whole. And one of the first things we did was make a conscious decision not to offer a range of F&B. We sell good coffee and soft drinks, but I didn't want to go into the food. And the reason for this was, why compete with the guys that are around us? Why not bring something to the Mall? And we struck up partnerships with some of the big players on the Mall. Pizza Express, Nando's, Ask. I can't make pizzas better than Pizza Express or chicken better than Nando's, so why compete? We offer a children's party, for instance, in Blue Water. We'll do 50 children's party on a Saturday. We now offer a branded children's party. So you can get, as your Gravity experience, a Nando's party. These guys deliver the food into our unit. They receive a Nando's party. We serve it on Nando's plates. So we deliver this experience in-house. Nando's love us. I should be a lot thinner than I am, but they keep feeding me. So they really appreciate. We make the kitchen, we make their restaurant bigger. We take all the screaming kids from them. And, we also have a wristband scheme where, in the beginning we used to beg to work with these guys. Now they fight to be part of it. Free drink at Nando's, 30% off Ask. It really is about working together on the Mall, I believe. And so much so that now Gravity has come out of the unit, and we're now taking space down the Mall with climbing and sky coasters to also offer these guys in these restaurants, a bit of a visual when they're eating, something more. Consumers these days are bloody hard work. They want so much more. Just eating isn't enough. Just shopping isn't enough. So I believe the impact's been fantastic of where we are. Since we opened in Escape Yorkshire, which was a pure leisure scheme with 4 million footfall. We've put 22% on those numbers, and nothing's changed but gravity. People want an experience. Pizza Hut, next to our Norwich site, have increased sales by 40%. You know, it's not all doom and gloom out there. There's some real good stories. And you know, I'm buoyant. I'm positive about the future.
Okay, good. I mean, and interestingly, in Retail Watch, which is published by PropertyEU, that focuses on retail trends and what happens with the investment side, we'll be looking a lot at retail and leisure and how those components are fitting together, because for sure there's a changeover happening. And Tobias, from your point of view, from an investor's perspective, how are you seeing this discussion between experience, how that's influencing your decision making on investments, whether that's to invest more in high street, whether it's to invest more in food and beverage led or food led experiences? What's your sense of that from an investment point of view?
Yeah, I think it's a very, very interesting approach in general. Yeah, so. When we do investments, we have to distinguish between the commercial buildings, which are more or less 100% let. So I don't see the space for an attraction like you offer. I don't see the space in the commercial buildings. But when we go out for a shopping center acquisition, then it might be a fair question. How do we use the space, which is perhaps currently empty, or which might become empty in a few years? And I think offerings like Michael have a very good alternative and option. I've personally small kids at home, and I know they like parks like you have. So it might be an attraction. And similar as the surgeries and doctor's practices, for example, which bring footfall to your center, your attractions does the same. Yeah, so it might be a very good use for upcoming vacancies. Yeah.
Okay, good. I'm going to come to that in a minute with you, Anke, actually, about pop-up shops and what's happening in that sense. But Herman, I wanted to just because of the research element, just pick up for me, if you will. There's a lot. I mean, it was interesting that in the discussion about investing in European cities, not one of the members of the panel mentioned retail as an investment class that they felt was going to outperform. So let's take a look at that. Do you think, there's obviously a lot of bad news stories coming from the US. You're doing a lot with Meyer Bergman in terms of inner city, urban retail schemes. What are you seeing in terms of investor appetite, and how much do you buy this negative view on retail?
Well, first of all, the retail market, I think you cannot see that in that sense as a single market. Of course, it's one of the main, let's say, channel markets, sub-markets in real estate, next to industrial and offices. But there are a lot of sub-markets. And I think when talking about the retail market, there is a lot of geographical varieties between countries. There is a lot of variety between cities. But also there is a lot of variety, between products, asset classes. And when looking to retail, obviously, I mean, there are issues in the market. We see, of course, the impact of online sales. We see the impact of retailers going multi-channel. And particularly in countries like in the United States, lesser extent, also in the United Kingdom, other markets, we see, of course, the middle class being under pressure. And of course, retail, it's particularly about the middle class. If the middle class is under pressure, that will impact the retail market per se. So obviously, there is a lot of negative news coming in from particularly the United States. I think in Europe that's much less. Of course, looking to retail, also looking to urbanization, suburbanization, re-urbanization, it fits also in the philosophy of the company. We firmly believe, let's say, in the city as, let's say, how it has functioned for hundreds of years. Basically a mixture of function where people lived, worked, met, partied, consumed, on, let's say, in an area which was relatively compact, mixed use, which was walkable, which was easily to go around. And of course, for many reasons, since the 19th century, industrialization, mobility, pollution and so on, we got into monofunctional cities. And I think what we are increasingly seeing these days is that actually urban environments, urban areas are becoming mixed use again. And of course, there's a lot of negative news about retail, partly understandable, I think partly unjustified. But on the other hand, looking to urban areas, looking to urban mixed use, I think retail is typically the function knitting all those functions together. Because if you're in an urban area, can you just enter an apartment building? No, you can't. Can you just enter an office building? Okay, we are cancelling reception desks, but in general, you can't. It's often the retail space, F&B space, hybridization, the places where people can go, where you can experience the urban environment, where you can socialize. So also retail. It's changing from, let's say, a pure purchase-based asset product. Retailing is changing to an experience. It's changing to much more, flagship locations. But of course, bringing that all together, it means that it happens on, let's say, new locations, a different type of locations. So that's, one of the reasons that we see a filtering. But in retail, we firmly believe it as, let's say, the element which basically knits urban mixed-use areas together.
Okay, good. And Anke, I wanted to just come back to what Tobias was saying there, also about how people are using space, entertainment, leisure, but also more pop-ups coming in. What's happening in the German market?
We're discussing a lot with investors what is the future of retail and spaces, etc. What we generally see is that malls are not dying like they do in the in the US. Careful. We rather see that the demand is less. So tenants reducing their units, making space available. We see that, let's say, second floors are more or less, it's difficult to rent them at all to retail tenants. So we still see demand, but we see different formats. So you have to think about alternative things you can do with that area that is just vacant. Because if it's vacant, it costs you non-recoverable costs. If people look at it differently from the investment market with structural vacancy, it's not very good for the overall quote of your fund, etc. So people are looking for solutions there. And I think we are at the very beginning. So we at JLL, we founded a small team that looks at these alternative uses. So we are in the comfortable position that we have an expert for inner city logistic, for leisure, for cinemas, for residential, hotel, etc. So we have this interdisciplinary team. What we think you need to find an alternative use for these spaces, and on the other hand, bring value add to your property. And of course, it's expensive and that's painful. But I think now is the time to really react and find solutions. And on this theme of pop-up, I think it's probably the most used store concept you could find over the last couple of years. But usually this really strong pop-up work in really strong locations, so the center that have already high footfall, because you want to present yourself to a lot of people. But what I think we should see more is regional tenants, not the brands you see everywhere. And if you ask customers, it's always the same response. I know that from an investor point of view and creditworthiness, etc., you rather want to have the big brand, but people are really looking for difference and for things that are not everywhere. And I think you can make a difference with that.
Okay, good. And Michael, you've mentioned a lot of examples there from the UK market. Are you already doing things in continental Europe or outside of the UK? Do you think what works in the UK will automatically work elsewhere? What's your sense of that?
I mean, I love the German market, and I don't think there's too many dissimilarities between the German market and the UK. It's obviously somewhere we would like to really be part of. We're just signed our first partner deal in Saudi Arabia, which is nothing like the UK market. If that was going to be our first break from the UK, I genuinely didn't expect it to come there. But again, you look at what's going on in a country like Saudi Arabia, and it's phenomenal. You know, they really are grabbing their leisure by the hand because they're actually allowed to do something now. So yeah, we're opening 10 parks in Saudi Arabia over the next 3 years. again, Dubai, they have a very similar culture. I feel a shopping culture to ourselves. We're looking at there, and the interest really is worldwide, because this isn't a European problem or a UK problem. Everyone is looking for more experience, and some of the interest from Mongolia and Japan. It really is. People are up in the game, and it is about experience. As Herman mentioned, retail is changing, and we've either got to change with it, or it's something has to give, and people still want to go out. People don't particularly enjoy, I believe anyway, the online shopping experience when you've still got to do something with those kids. Let's take the family out. Let's have an experience for the day, and get active and really be part of the mall and drive it forward.
I mean, it's quite interesting. We've got a session tomorrow which is on the future of office, and I remember there being lots of discussions about when broadband came in, that everybody would be home working, offices would no longer be needed. But what do we see? That actually it's changed, and the offering has changed to meet the new requirement from the market. Certainly if you look at the growth of that sort of flexible office space, meeting what people are needing, it's just quite interesting to see whether or not retail will go through a similar thing that is at the moment is just being mispriced.
It's partly in our own hands. If you look at the co-working business and the co-working operators and the co-working developers, I think their marketing is excellent. And they do it very well, and they position really the offices as a place to meet, to socialize, do your work, get ideas, be a creative, instead of being just working from home. For retail it also means, and particularly retail property, marketing, the way, convince the people why, it's attractive, sell it basically, brand it. I think it's very essential. In terms of marketing, I think we still have a lot to do.
Okay, Tobias, I just want to come to you on the investment side a little bit, which is, what are you seeing in terms of, I mean, we saw from Sandra earlier some of the transactions particularly, but what are you seeing in terms of the difference between prime, secondary, and availability of product for you as an investor?
Yeah, I think it's interesting. Despite this, you mentioned it, Herman, the bad news about retail. My recognition is that we are facing a lack of product, especially in the high street retail sector in Germany. It's difficult to find properties. Same, I think, Anke, you can confirm it. Same applies for shopping centers. So it's difficult to find appropriate products. Our strategy is that we go to the smaller, medium-sized cities in Germany, that we do acquisitions in cities you have never heard, I assume, such as Delmenhorst, Cuxhaven, Bayreuth. All of these cities do have a pedestrian zone, do have a high street, which is only 200-250 meters long, but it is there, and I think you mentioned it. This idea of urbanization takes also place in a smaller or medium-sized city. So we don't have to forget, when we talk about retail and the future of retail properties, these are the best locations in the respective city, despite whether it's Hamburg or a smaller one. And so we personally still feel very comfortably with retail investments in Germany. But your question was, how is the investment market changing? I think we are facing a lack of product currently.
Okay, interesting, which is very different to a lot of the views that have been expressed before. Yeah, go ahead.
Well, we basically see the same. Of course, looking to our investment strategy, we do work a lot with investment capital coming from outside of Europe, which is obviously a reason that we are, focusing on core cities, capital cities, as that basically outside of Europe, the investors simply understand it easier. But we also see simultaneously a shortage of product, but at the same time also an oversupply of product. The ones who have read the Financial Times of yesterday, they could have read that in the UK, for instance, there's 2 or even more billion of shopping center assets is at the moment basically on offer in the market which cannot be sold. So there is an issue. And I think we see a polarization between prime product and secondary product, which will continue. We see also a polarization, and I think that has partly to do with the international discussion between high street property and also retail warehousing on the one hand, and shopping centers on the other hand. Of course, shopping centers are big. You have to manage the complete asset. You have to, let's say, guide the move from, let's say, monofunctional retail into more mixed use. Maybe more complex to understand, but particularly for the international discussion based on experience in US, investors are more cautious. And what we see also happening in the shopping center investment market is a very strong concentration, consolidation among the largest operators, Westview, Unibail, Citycon, Hammerson, etc., etc. So the shopping center investment market becoming more and more operator-based.
Okay, good. And I wanted to pick up with you, Anke. Just give me an overview of. There was a slide earlier from Sandra about brands, what was happening. What are you seeing in terms of? Are we seeing new brands coming onto the market? And if so, where are they focused on? Is that food and beverage? Is it fashion? What are you seeing?
I would love to say that we see tons of tenants coming to Germany. At the end, it's really selected. We have new market entries. We have seen Sephora opening very successfully. I think Decathlon or Decathlon, however you want to call it, probably have managed to do the largest expansion ever in only 12 months in Germany. So they picked up a lot of the space that was difficult for landlords to lease, and they used, I guess, very favorable conditions to do that. So we still see tenants expanding. We see some tenants consolidating. We see them picking their best locations. But still, my impression is, from speaking to people and speaking to tenants, that we've kind of through the worst, let's say, in the market. We see behavior going back to normal, that you have proper leasing discussions, that demand is picking up slightly, that negotiations moving forward. So I wouldn't say everything is nice and easy, and there's still pressure on rents, but there are new interesting formats. And I think more really on the classical fashion, sports, etc. side, rather than international gastronomy entries, because I think we have a quite healthy market there that is expanding. I'm hoping that we're coming back to normality over the next year.
Okay, good. And Michael, obviously, as well as being somebody who's potentially influencing and helping shopping centres in terms of creating additional footfall and creating an experience, you're obviously also an occupier. So what is it that you're also looking for when you're looking at where you might potentially expand into? Are there particular things that you're looking for as, I suppose, an occupier, a retailer in shopping centres? What are the things that are on your tick boxes that you need to go into that location?
Again, for me, it's mainly the mall. The shopping centre for me is, they're a great hub. They cater for all weathers. The main thing I'm looking for is a landlord that is just looking outside the box a little bit. Again, I believe the days of thinking of a square box, let's fill it, get the rent, move on, I think them days are gone. And I think a landlord who can really look at how they can make their scheme different to the next, and be part of it. If a landlord, in my eyes, looks at the scheme as being one encompassing thing, a little bit of imagination from the landlord goes a long way, and some money. that also helps. But no, it is, and more and more landlords are coming round to my way of thinking, and it's happening. I have to take my hats off to the landlords that we have. They really are starting to look outside the box. So much so that our first site that they did give us at the back, that they're paying for us now to move to the front of the scheme in the middle of the F&B. So it's happening. it's good.
Okay, good. We're running short on time, and I want to make sure for those of you who've got a 2:00 appointment, you can get to it safely. So, just starting with you, you can answer. Well, you can. Let's do the same question to everybody, which is, so in terms of investment, and you can see it from the point of view of investing in your own business, which locations, which countries, which cities, which kind of things you would be interested in, and then everybody else can look at it from an investment perspective. Let's just pick up. Let's start with you, Michael. So, top locations. Where are you looking to invest, and therefore we'll decide that everybody else should go with your view?
For me, I'm looking to invest in high footfall leisure and retail malls. I'm a realist. Am I going to go and get an A location in an A mall? Probably not. Would I get a B location in an A mall? Yes. But, even a B location and a B mall for us, if there's some natural footfall there, that's where I'm looking to invest.
Great. Anke, where should people put their money?
In shopping centers, of course, first of all. If I was to invest, I would set up a fund for secondary retail assets, because I think they're completely underpriced these days. I think you can buy them cheap, so if I would be rather from the higher return profile, I would do exactly that. And I think, it's coming back to basics for the standard shopping center investment. It should be strong locations. It should be strong footfall, good performance. I mean, all the indicators we know, and of course, it should be really innovative management. I think that's the key these days. And in terms of, we wanted to talk about Europe. Probably the same is true for the UK. I guess you can buy cheap there as well right now. We see markets recovering like Portugal, Spain, really strong. We can see good chances and opportunities in the CEE market. So I think you can do really interesting investments all over Europe these days.
Okay, good. Tobias, are you going to be joining Anke there in secondary locations? Where should we put our money?
Yeah, I would start answering this question with retail. Stay in retail, because when we go back in the days to 2008 and 2009, when the crisis came, we saw that other industries have faced turnover losses of 20% or more. But the retail industry, which is, by the way, the largest in Germany, it did only suffer a loss of around 3%, which is nothing. So first point, retail. Then it depends on the yield you expect. I'm not sure whether we have seen it on Sandra's pages, but prime yields in Munich or Frankfurt are below 3%. If this is attractive for you, then this is the answer. For me, it's not. So I stay with my philosophy, go in the medium-sized cities. The best argument for this is, I think, we have in German this Mittelstand, these hidden champions from the industry, and someone mentioned it earlier that the problems in the US have been faced or have been caused by the medium-sized income people who cannot afford spending for shopping. And so we feel very comfortable in these medium-sized cities where we have a lot of companies which build this famous Mittelstand in Germany. And so we will stay retail, Germany, Mittelstädte, medium-sized cities.
Okay, good. Herman.
And just to add, it's half the price than for offices.
Yeah, this is true.
Okay, so there's a real difference between secondary office and secondary retail.
So whereas secondary office is really down to, I think, record yields levels never seen, not even in 2008. So if you buy a secondary location shopping center for office property for, I don't know where they are now, 3.5% or something, and in top locations even below 3%, and you buy a shopping center for 5.5%, that's half the price. I mean, people don't realize, but it's really half the price. So that's what I'm saying. It's really cheap these days.
And retail loves a half-price sale, so that's good. Herman.
Yes, of course. In our business practice at Meyer Bergman, when we invest, we tend to invest for the mid-long term. So typically a hold period on average 5 years, trying to do some improvements. So of course, given the cycle in the market where we are in, we're already in the late cycle of the market for a few years, and how long is that going to take, and how basically the cycle will change in the coming years. So I would take a rather cautious approach in that respect. Focus on core locations, with indeed a retail component, urban mixed use, and preferably those properties where there is still an improvement to be made. So where you have an autonomous earning factor in the business plan. Of course, that means tough acquisitions, because we are not the only one thinking like that. At the same time, but that's maybe still a few years away. But I think, talking about secondary locations, particularly secondary shopping center locations, which maybe from a pure retail point of view are becoming less relevant, but from a location point of view tend to be good. I would definitely consider buying those for repositioning, redevelopment, changing functions, etc., as those locations will give opportunities in the mid-long term.
Great, thank you.